Hey friends, it's Jeremy Goodrich, owner of Shine Insurance and your host for the Shine Insurance YouTube channel. Today we're going to talk about something that I address almost every day. 4 most common reasons that your insurance price went up. Insurance prices change all the time, and there are more than one reason for it, and people get really confused. So hopefully this video will really dig into the 4 reasons so you won't be confused and you'll be able to tell why your insurance prices change every year. The 4 reasons are: sometimes there's a rate change, we'll describe that. Sometimes we lose a discount or multiple discounts. Sometimes there's change in coverage, the actual coverage on your policy. And finally, we'll address claims as a part of why your rate change or why your price changes. And then we'll talk quickly about a 5th reason that insurance companies really don't mention, but can have a huge effect on your insurance premium and can be very confusing. So let's dig right in. First, we need to understand a key term, which is the term renewal. The end of one insurance policy term and the beginning of a new one. Every year with home and auto insurance, you have a renewal. A lot of times with auto insurance, it's every 6 months. So one of those 2 things is going to happen. Every 6 months or every year, you're going to get a new set of insurance documents with new agreements and a new price. So that's something to know about your renewal. Now, here's how it usually happens. Last year, you had a price, right? Maybe that's your homeowner's insurance, or maybe it's your auto insurance. Maybe it was $786. And then this year, it's $846. That's like $60 more than it was last year, almost 10%. And you're saying, hey, what the heck? What's going on, right? I don't understand. I didn't have any claims. The most common thing I hear is, I didn't have any claims. I didn't have anything happen. Nothing changed about my experience, and yet somehow my premium, my price changed. And why did that happen? So let's look at that right now. The first reason it could happen is simply a company rate change. At each policy renewal, companies have the right to change the rate they charge. It can be based on a bunch of stuff. It could be based on claims paid out in the previous term, not just on your policy, but on all the policies that they have in your state or in the United States, in their company. It could be the claims they paid out. They paid out a ton of claims, they lost money, and now suddenly they're going to increase premium on you. It could be the general profitability of the company, right? Maybe it's other costs that aren't working properly for them. They're not making money or not making the amount of money they think they should, and so they increase premium as a way to, or they change the rate as a way to address that. Sometimes they just simply don't want to grow in your area anymore. So they feel like they have too many insurance policies in your state or even your town, and they've decided that they don't want to grow there. So what's a good way to not grow somewhere? Increase prices. And we see that happen a lot with companies where they increase prices. So, and then obviously lots of people leave and go elsewhere. And in some ways, that's kind of what they wanted. They want less risk in that specific spot. So that can be a reason. And then almost anything else. Now, it's important to note that insurance companies do have to file their rates with the state. So there is some regulation around what prices you can charge, but it doesn't have to be a certain reason for why they choose the rates they do. It's just regulated to make sure that people aren't, or companies aren't overcharging. So that's company rate change. And really, I think a rookie mistake, it's not the biggest rookie mistake in the world, but a rookie mistake can be purchasing a 6-month policy instead of a 12-month policy. If you can avoid it, particularly with auto insurance, it gives them 1 fewer time to change your price every year. So if you have a 6-month policy, the reason insurance companies do that, there's 2 reasons. One is so they can show you a lower number when you're looking at their price, and so you think, it's a mental thing. And the other is so that they can change your price more often. And so really a 6-month policy is not to your benefit. A 12-month policy is more to the benefit of the insured or you. And so if you can get a 12-month policy, that's the best way to go. A lot of times insurance companies only offer 6. There's a reason for that, but you may be stuck with 6, and that's fine. The second one is loss of discounts. Insurance policies are based on discount. The pricing's so based on discounts, it's almost crazy. If you lose a discount, obviously the price goes up. And so many discounts exist. There's a whole nother video on discounts that I've created. I'll put a link to it right there in the top corner, but let's quickly just address the 8. Safe driving, accident-free, The multi-car, multi-policy, your job or the associations that you're a part of can give you a discount. Your age or gender can give you a discount. There's a paid in full discount usually. There can be loyalty discounts if you've stuck around for a long time, or introductory discounts if you're just moving into a relationship with a company. And good grades for students, a huge one. If you have youthful drivers, either in high school or college, the good grades discount can be $300-$400 a year. I see that all the time. And when that discount falls off, the price goes up, and usually that's a huge change for someone. So discounts are a big part. Let's address number 3, and that's simply coverage changes. So now we're talking about the coverages on your policy. Insurance companies can change the coverage options they offer at renewal. It doesn't happen a ton, but it can often be confusing and sometimes even hidden. And I think one of the most common, well, we'll get into some examples. So some auto examples could be they increase deductibles. So this is the amount you have to pay in a claim before the insurance company would pay. They could increase deductibles. They could lower liability limits. They could maybe remove roadside assistance. If you've used your roadside assistance a lot, maybe you had 3 tows in a year, they may decide to remove that. On homeowners policies, they could increase deductibles, and this is probably the biggest change I see insurance companies doing without the permission of clients, is they will send a renewal and they will say, well, our minimum deductible for your homeowners premium or your homeowners insurance policy is now X, is now 1% of your coverage. And so if you don't pay attention, you don't realize that you thought in a claim situation you only had to pay out $1,000, but when that claim actually happens, suddenly you have to pay out, $2,000 or whatever it is. And you're like, wait a minute, what's going on? And what happened was at a renewal, the deductible got increased on you. So I've seen that many times. Lowering your liability limits, don't see that often. And then increasing the replacement cost on your house. Again, we have other videos on this topic, but I do see this a lot. And this isn't actually a negative. This is almost a positive that the insurance company is doing for you, but you can learn more about that on other videos we've created on the topic. Okay, let's talk about claims. Claims, like, this is why you have insurance, right? When you've had a reason to use your insurance in the past term, you had a claim, something bad happened, and the insurance company paid out on that claim. Hopefully they took great care of you and you had as good of an experience as you can have with a claim. When that happened, then you get your renewal and suddenly your premium went up. And I think this is incredibly frustrating. I agree that it's frustrating, but it is absolutely a part of how things happen with insurance, so I wanted to include it here. Different claims have different effect with different companies. So everybody takes a different approach to how they handle claims and how it affects your premium. Some companies, if you have a claim that really wasn't your fault, so if it was lightning or hail or things of that nature, then it doesn't affect your premium at all. And then if you had a claim that could have been avoided, then it can affect your premium. In general, claims that could have been avoided affect your premium more than claims that could not have been avoided. But that's not always true. Different insurance companies have different rules for how claims affect your premium. So you should always ask your agent, if you did have a claim, hey, how is this affecting my premium and how's this going to affect my renewal? A rookie mistake, for sure, one of the biggest rookie mistakes I see people making is filing small claims on their insurance policy. If you're going to make a $100 or $200 claim, it's just not worth it. You're going to end up paying more money in the change of premium in the future than you got out of the claim. So definitely ask your insurance agent in a claim situation, especially a small claim, is it worth it? That's super important. Okay, and into the bonus, this is a reason that is not often mentioned by insurance companies and can feel very frustrating, honestly, and it is insurance credit score. So most insurance companies in most states use some version of your credit score to figure insurance pricing, and it can have vast effects on your insurance premium. Now, there are some states in the United States, California being one of them, where it is illegal to use this, and that's great. But in most states, whether you know it or not, your credit is being used to figure out your insurance premium. And there's a reason for that, whether you like it or not. I thought I would mention it, and that is simply that insurance companies don't have a lot of ways to know who you are and how you handle yourself and your finances and things of that nature. They don't know you very well, and so insurance credit or your credit score is one way that they can see how you manage yourself and how you manage your finances. So sometimes that really bites you when it shouldn't, and if they actually knew you or knew your story, they would see that is not a real reflection of who you are. But they're looking for reflections of who you are, and this is one way that they find it. So insurance companies can use insurance credit in most states, and they absolutely do. So that's important to know. And sometimes a renewal will happen and nothing else changed. None of the other things I said changed, but your credit score changed. And so your insurance premium changed. And to realize that and know that is so hard. It just is, it's hard to explain as an insurance agent for sure. Okay, that's the end. So what did we learn? Well, we dug into these 4 reasons: rate change, loss of discounts, coverage change, and claims, how they can affect your premium. And then finally, we dug into the bonus 5th reason, which was your insurance credit score. So hopefully now you understand your renewals a lot better, and you can look at your renewal documents and try and figure out, okay, why did my insurance premium change? Was it just that my insurance company decided to jack up my rates, or are there other factors playing in as well? Those things hopefully are a little bit more clear. So as always, next steps are please subscribe to our channel so you can get our newest videos in your inbox right when we get them out. And then finally, please do share with other folks. If you've been talking with someone about why their insurance premium went up and they didn't know either, share this video with them so that they can understand that a little bit better. Awesome. My name's Jeremy Goodrich. I'm the owner of Shine Insurance and your host for the Shine Insurance YouTube channel. I hope you learned a lot from this video, and I look forward to seeing you next time.